What is the difference between an inspection and an appraisal? An inspection is for you. You hire an inspector to check out the home's condition, like the roof, electrical, plumbing, HVAC, and safety issues. It helps you determine whether you want to move forward with the purchase, renegotiate, or walk away. The appraisal is for the lender. The bank orders it to confirm the home is worth what you're paying. If the appraisal comes in low, you may need to renegotiate, bring extra cash to closing, or switch strategies. One quick way to remember is inspection is for condition, appraisal is for value. What's a seller concession and how does it affect my payment and my closing costs? A seller concession is when the seller gives you a credit at closing to help cover certain fees like closing costs, prepaid taxes, insurance, and sometimes a rate buydown. What it does is it gives you less cash needed up front because some of the costs get paid by that credit. If you use it for a rate buydown, you can lower your interest rate, which can lower your monthly payment. What it doesn't do is change the price of the home itself unless you negotiate it that way. It's also limited by the loan type and the appraisal. A simple example, if you negotiate a $10,000 select credit, you can bring $10,000 less when you come to closing, or you can buy your rate buydown. All depends on the deal. How much money do I need to buy a home between the down payment and the closing cost? A good rule of thumb is to plan for your down payment plus about 5% of the purchase price for closing costs. Down payment depends on the loan. A conventional loan can be as low as 5%, 5%, and sometimes more. FHA loans are 3.5% down, while VA and USDA are 0% down, but you still need to pay closing costs. A quick example on a 500. If 3% of a 500 is $15,000, 5% is $25,000 for closing costs. In that example, you would need about $40,000 to buy a home. One more thing. Buyers can also negotiate credits from sellers, and there's oftentimes lots of programs where you can take advantage of closing costs. How long does it take to buy a home from shopping to closing? Most people think it's quick, but realistically, it can take anywhere from 30 to 90 days from serious shopping to getting the keys. Here's the breakdown. Shopping and making offers usually takes 1 to 6 weeks depending on the inventory and how picky you are, which is a good thing. Once you're under contract, most closings take about 30 to 45 days if you're using a mortgage, and cash buyers can close in as little as 2 to 3 weeks if title work and inspections move quickly. The biggest thing that can change the timeline is how fast you get pre-approved, inspection issues, appraisal timing, and how quickly the paperwork gets turned around. What credit score do I need to buy a home? Most lenders like to see at least 620 for a conventional loan, but that's not the magic number. If you're around 700 or more, you'll usually get better rates and options, which can save you a lot of money. There's also loans where you might be able to qualify with a lower score like FHA, but your rate, mortgage insurance, and approval can get tougher the lower you go. Bottom line, it's not just about your score. Lenders also factor your income, your debt-to-income ratio, your job history, and your cash reserves. If you need a good mortgage broker, reach out to me and I'll be happy to share some. What is the difference between being pre-qualified versus pre-approved? A pre-qualification is a quick estimate. You tell a lender your income, your debts, your credit range, and they give you a rough idea of what you might be able to afford. It's helpful for planning, but it's not very strong in making an offer. A pre-approval is a real check. The lender verifies all the info via your pay stubs, your W-2s, your bank statements, and then they also run your credit. They'll give you an approval letter with a very specific amount of what you are approved for. This is what sellers and listing agents want to take your offer seriously.